Holy smokers, folks, this ain't no dang jokers. Oh boy, do I got a lot to share with you in this video here today. We got to talk about the markets absolutely collapsing. We got to talk about the economy. I got to show you some stuff I was just looking at. I spent the last few hours looking over some economic data, okay? And I'm not talking about backward stuff. I'm talking about like more current stuff. I'm talking about construction. I'm talking about trucking. I'm talking about a lot of various things that are definitely we're in for it, man. We're in for it. That's all I'm going to say about that, and you'll see in this video, okay? So, essentially, NASDAQ is now down over 29% year to date, okay? Over 29% year to date. NASDAQ's down over 2.5% today. This is obviously driven by the Snapchat situation, okay? Mainly here today. Now, I saw a lot of memes out there today about like Snapchat. Oh, when did Snapchat become the pillar of the U.S. economy and things like that, right? Here's the deal. The stock market is looking for any reason to sell off stocks right now. Wall Street's looking for any reason. And so if you have a company like Snapchat, that's at the end of the day is a pretty big advertising company, right? If you have them report their earnings and a month later they come out and they say, dude, we ain't anywhere close to those numbers. It's way worse than we had anticipated a month ago. The last time period you could really go to when this was happening, outside of March of 2020, but that was a freak scenario, was 2008. That was the last time period when you had a company report earnings and then a month later, 2 months later, like, dude, those numbers we thought we were going to do, we aren't even close. It's so much worse than we anticipated. And so when a Snapchat goes ahead and does that, everybody starts thinking Meta's next, Google's next, all the other advertising companies are next, and overall the economy is getting far worse, far more rapidly than anyone anticipated. And when you can get into one of these cycles, things get so much worse than anticipated, and that's how you get the NASDAQ down 29% year to date. I mean, I don't know anybody that said the NASDAQ was going to be down 29% through the first 5 months this year, and that includes bears. I don't know anybody that thought it would be that bad that fast. I know a lot of people that said, okay, 2022 could be a bad year in the market, but I don't know anybody that was making a prediction saying, yeah, through the first 5 months, NASDAQ's going to be down 30%. No one was doing that, man. And so this is what happens. Like, things can get much worse, much more rapidly than anybody had really even anticipated, including Tesla, Maesla. Oh boy, are we even close to a bottom on Tesla? My answer to that is, I don't think so. And if the market keeps dropping, this baby's gonna keep dropping like an absolute rock. And the hardest thing with good old Tesla Maesla, that once again it's down over 7% here today. Year to date, the stock is down about 48%. As a Tesla shareholder, it's been a Tesla shareholder for a long time now. I can tell you, I've seen this stock go through some very volatile periods. And if this NASDAQ keeps dropping, Tesla's gonna keep underperforming, and it's going to keep, if the NASDAQ goes down 2%, that means Tesla's down 5, 6, 7%. And so as the market just continues to get destroyed, Tesla's going to continue to get destroyed. And the worst part for a Tesla stock, at least, is this is a company that they haven't even reported bad numbers yet. The numbers have been extraordinary quarter after quarter after quarter. Imagine what would happen in the stock when they have to report like orders aren't quite coming in the way we thought they were going to come in, so 2023 numbers aren't going to be quite there. Like, imagine when they're going to report that. Like what happens to the stock price then? If they've been reporting perfect quarters, and then if they don't report a perfect quarter, what's going to happen to the stock price then, right? And so that's why I look at Tesla and I'm like, oh my gosh, man, I as bad as I want to say, oh, maybe we're close to a bottom here, I don't even know if we're anywhere remotely close to a bottom on Tesla Maesla. Unless a market magically starts to recover, Tesla's going to be down 50, 60+% year to date before you know it, okay? Nvidia, there's another one. I think, if I recall, Nvidia is reporting earnings tomorrow. When it comes to Nvidia, the stock's down about 47% year to date. Nvidia, Jensen Huang's an amazing CEO at that company. I don't think he can save the day. I mean, at the end of the day, if the numbers aren't there for a business model because of the economy, like, the numbers aren't there. And so I'm looking at Nvidia and I'm like, I don't even know if Jensen can pull a rabbit out of his hat in this situation. I really don't. And so, if you're hoping Nvidia saves the market, I mean, it's a possibility, but dang, I gotta say, in this sort of market we're in right now, I think it's a pretty darn slim probability, because if they give any guidance out there, I don't think the guidance is necessarily going to be very exciting. And so that makes it very hard for me to say, you know, a stock like Nvidia is also anywhere close to a bottom. You know, I hope it is for the sake of the NASDAQ, because if this one drops more, it's going to drop the rest of the big tech stocks as well. If Nvidia reports earnings and that stock's down 10, 15%, oh my gosh, like the whole NASDAQ's getting hit again. And that means everything from Apple and Microsoft all the way down to the Shopify's and Netflix, Tesla, Meta, everything. So, I mean, we can hope for the best, but it's hard to be optimistic about Nvidia's, any guidance Nvidia is going to provide there, okay? When it comes to big tech, it's devastating. You know, Shopify down over 12% today. Meta's down 8.7% here today. Tesla's down 7.6%. McDougal's down 6%. By the way, I did some buying of stocks here today. I think I bought 7 stocks here today, and some of them were big tech stocks. I might do a video tonight about all the stocks I bought. But yeah, I was out there buying here today. Netflix down 4.7%, Nvidia or AMD down 4.6%. I mean, it's just devastation across the board. The Q's down 3%, right? Apple, Microsoft, I mean, those ones just continue to get hit. Now, in regards to my opinion on Apple and Microsoft, will those two stocks specifically continue to get hit? And one is, if the NASDAQ continues to go down, yes, absolutely, Apple and Microsoft are going to continue to get hit. The thing I really worry about, this is more in regards to Apple specifically. If you're thinking about more downside for Apple and going to the $100 to $120 range, I think it's a real possibility. There's a company that's been reporting near perfect quarters. I don't think they're going to be able to do that anymore. I think Apple numbers are going to weaken. I think everybody's expecting Apple to grow their business in the back half of this year. Everybody's expecting Apple to grow their business in 2023. I don't think they do it. I think they're going to shrink their business. I think their revenue is going to go down. I think their EPS is going to, unfortunately, probably go down as well. China's extremely weak. Europe's flirting with recession. The US is going to get messy. We're going to go through a lot of numbers here in just a moment that I'm going to show you guys. And so I think Apple, unfortunately, I think it has a lot further to fall. And I know, if I recall, Burry's short, heavy Apple. You know, I wouldn't be surprised. I mean, obviously, he's already making a lot of money. I wouldn't be surprised if he makes a lot more money. And like I said, unless there's a magical recovery in the market, you know, there's just no hope. And when it comes to the Apple numbers, I don't think you can be very excited for the next, let's call it 6 to 12 months with Apple in regards to their numbers, if not the next 12 to 18 months in regards to Apple's numbers, okay? Cathie Wood just continues to get absolutely leveled right now. And the ARK ETF, I mean, this is back at 38 range. If I recall, 52-week lows in the 37 range, and that's actually a multi-year low for ARK as well. And I mean, you just look at their biggest positions. I mean, look at these stocks. Oh my gosh, it's awful. Roku, 15.8%. Unity down 14.5%, Square down 10.8%, Coin down 9.7%, Twilio down 9.7%. Obviously, we spoke about Tesla. I mean, look at these stocks. So one positive was Zoom trying to eke out a 5% gain. That's devastating. That's absolutely devastating. And, ARK just can't find a bottom anywhere. As soon as you think this has to be the bottom for ARK, it finds a new low, and it finds another way to drop another 7%. It's incredible. That's the best way I can describe it. Housing stocks all basically hit new 52-week lows today. Toll Brothers, RH, all these stocks. RH, high-end furniture. You know, this is one that I'd be eyeing if it goes down to $100, $150, which I don't think is out of the realm of possibility, given how weak I think numbers could be in the back half of this year and going into next year. We'll see what happens there. But all these housing stocks just continue to get obliterated. No one wants any piece of housing right now, okay? You look at, this is a watch list I have. These, now, I should call this stocks down 70% plus. All these stocks, when I added them to the list, they were already down 60% plus. And I mean, just look, this is the problem with the market. You not only have the stocks that had been holding up getting absolutely leveled, but you got these sorts of stocks that are, already devastated. It's like, do you have to pound them into the ground so hard? Like, come on, man. Like let them breathe for a minute. And they're just not letting these stocks breathe at all. You know, Purple 17.5% today, Real 15% plus, Shopify, Farfetch, Zillow, Square, Fastly, Etsy down 10% today. I mean, they just won't even let these stocks breathe for a moment. Not a moment, okay? And, in terms of my opinion on a lot of these stocks, are they close to a bottom? So I think a lot of these stocks are closer to a bottom than maybe some of the bigger dogs. But with that being said, it doesn't mean they can't get pounded a little more over the next month or two. So that's a tough part with a lot of these stocks is, they're devastated. A lot of them are probably closer to bottoms than many other stocks in the market, but gosh, man, it doesn't mean they can't still continue to get pounded. Now, when the market does flip, a lot of these stocks you're seeing right in front of you will be some of the strongest performers when the market actually flips and we start going green again. But we don't know when the heck that is. That could be 3 months, 6 months, 9 months, 12 months from now. No one, could be a week from now, right? No one really knows when this market flips and we start going green again. But I can tell you, it's, when it does, those stocks will roar. But for right now, it's just obliteration. I'm looking at some silly pricing on travel stocks. There's several stocks I'm looking at here that are just at silly prices that it's just like, okay, this is just too much. This is just too much. Uber is a perfect example of this. Uber now, guys, listen to this. Uber stock is now trading and down 48%, since this one went IPO, but Uber is now down to ranges it was in March of 2020. March of 2020, are you kidding me? Like, to think about that for a moment, the world has opened back up. Like, let's be clear about that. And you have Uber trading back at ranges when the world was basically shut down and their rideshare business was like pretty much done. I mean, that's just insane to kind of think about for a moment there. That's just insane to think about. And so I look at a stock like Uber, and I think it's a great value. I really do. I think it's a great value. But with that being said, I mean, in this market, it has no patience for an Uber right now, right? I look at even CCL. Look at this. This is amazing. This is absolutely amazing. CCL stock price today is lower than the stock price was April 27th of 2020, when their entire fleet was shut down. And there was like, you guys aren't going to sail for the next year or two, at least, if not 3 years. Think about that for a moment. That stock price is lower today than when they had to shut down their entire business, right? And like, here they are, they're up and sailing, but no one wants a piece of CCL. And it's just crazy to think about, right? And that's not a stock I personally own. It's a stock I owned in the past, but it's not one I currently own. But I just look at it kind of like Uber. Uber's a stock I owned in the past. I don't own it right now. But I look at these stocks, I'm just like, how does that make any sense? But that's the market we're going through right now. The market doesn't have to necessarily make sense. When you're in a market where stocks are just going to the moon, as they say, right? Or you're in a market where everything's just getting absolutely obliterated and the market's crashing, things don't have to make sense. Valuations don't have to make sense. Stock prices don't have to make sense. It's whatever the sentiment is for that day is what drives these stocks, right? Look at Alibaba. The stock's now down over 74%. And this is the crown jewel of China. The crown jewel of China. No one wants to buy Alibaba stock. No one's even thinking about that stock. They're like, forget that. The crown jewel of China. You can't find a buyer out there. Okay. All right. So now let's get into some economic stuff that is pretty worrisome. Well, I mean, there's good and bad here. Okay. So what we're looking at here is essentially, like freight rates. Okay. So if you're a company and you got to ship product, like what are you paying per mile? Things like that, right? Now, there's good news and there's bad news here. The good news is if you own any sort of company, any sort of stock, that they have to send physical product around, the prices have been dropping and will likely continue to drop over the next 6 months. So that's great news. And this is regardless if you're sending dry goods or if it's refrigerated products. So there's several stocks I own that have been absolutely obliterated by transportation costs in terms of their margins, right? Oatly and Tattooed Chef come to mind. Oatly and Tattooed Chef. And so this is a great sign for those sorts of companies, and I don't think that trend's going to slow. If anything, it's probably going to keep going. Now, on the bad side, because as with all things in life, right, if there's some good, there's some bad. The bad news with this is the trucking industry, which is a massive, massive industry, is in a bad place right now, and I mean a really bad place. The reason being is you have this going on, which that's not good for truckers, that's not good for anybody, right? It's brokers or anybody. But not only that, fuel prices are at pretty much record levels. If you're a trucker right now, or you're a trucking company, when you got the amount of money you're making per load or per mile going down, 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 and meanwhile, you got fuel costs that has gone through the roof to pretty much record levels ever throughout human history, I mean, this is devastating, absolutely devastating for the trucking industry. And so this means now a lot of truckers are not going to be making the money they were making. A lot of trucking companies aren't going to be making the money they're making. There's going to be probably have to be some deleveraging in that space. There's going to be some companies that go under, have to sell to other trucking companies. There's going to be a lot of truckers that basically are going to be parked and aren't going to be having loads like they used to, right? And when you hear about companies like Walmart and Target having inventory through the roof right now, it's not a good sign. And when you talk about a slowdown in the economy, this is horrible for the trucking industry. And so, yeah, this is good if you're a company that has to transport goods because everything's getting cheaper for you. That's good. But man, I'm telling you, it's really, really bad for the trucking industry. And, those truckers aren't going to be able to spend as much money, right? They're not going to make the money they were making before. And like I said, a lot of trucking companies could end up going belly up in this situation, right? Now, you add on top of this, sales of newly built homes tumbled 16% in April. Sales of newly built homes dropped 16.6% in April from March, far more than expected, and we're down 26.9% since April 2021. So that's what I like to look at, the year-over-year numbers. Sequential numbers are kind of important, but really the year-over-year numbers what I really like to look at. So sales are crashing. And this is just a start. That's a thing with this. This is just a start. Like interest rates just started really going up in a major way. Mortgage rates over the past few months. Like this is just the start of this game. The annualized rate came in at 591,000 units, seasonally adjusted. Analysts had been expecting 750,000. That's the slowest sales pace since April of 2020 when everything was shut down, okay? I mean, housing is about to be in a bad place, okay? If you look at housing starts, obviously they ballooned to record levels over the past few years. But here's what I'm looking at. I'm thinking about canceled contracts starting this fall. Because here's what's going to go on. Real estate prices are likely going to start to drop like a rock, okay? Over the next 3 to 6 months. So imagine you bought a home, a new home to be built at the end of 2021, beginning of this year, something like that. Well, those homes will be ready this fall. But meanwhile, I think prices are going to dive, right? Mortgage rates have also gone crazy high, and the Fed's still talking about raising rates. And, if the 10-year keeps going up, that could move mortgage rates up more. That's a whole mess. And so if you're in this dynamic where real estate prices start coming down, right? And you have a home that you paid ... amount, and the mortgage rate's some insane rate, why not maybe consider canceling that contract? Especially if that home is also 30% lower than what you paid, right? There's a home across the street from me being built right now. It's a $4 million home. $4 million. I think that home is going to be done in probably November, December. I wouldn't be surprised if when that home's done, it's actually worth $3 million. And so we're talking about $1 million difference. And I might be high on that number. It might be worth 2.5 by the time it's done. And so, that person building that house over there, maybe they have so much money that they don't care. But if they don't, right, and never mind mortgage rates have gone up so much, maybe they consider, shoot, if that house is $1 million off, why not just cancel the contract? Yeah, you might lose your down payment or something like that, right? You might get some money that was tied up in that you can't get back. But if you're talking about that big of a difference, you might consider that, right? Think about all the folks that have built homes, that aren't buying multi-million-dollar homes, but it's like that $400,000 house that's being built, that $500,000 house, right? And if all of a sudden real estate prices drop 20, 30, 40%, the same thing that happened in 08, that's what ends up happening. People cancel contracts because they're like, this house isn't what it was. Never mind, imagine you lose your job or your income goes down. That's the other part, right? If you're talking about a decelerating economy, or especially an economy that's going negative, people's incomes go down. Jobs are lost. Bonuses that you thought you were going to get, you don't get. And so you really start to consider, maybe I'll cancel that contract. And so that's what ends up starting to happen. And that gets into a really, really ugly situation. And so we're at real jeopardy of having a lot of folks start to cancel contracts this fall. And that's when real panic would start in the housing market. That's when and remember, I'm going to keep reiterating this point, and for all the people that watch all my videos, I apologize, I'm going to keep reiterating this point, but I'm going to reiterate it because I know not everybody watches every video I put out. Housing did not bottom for over 2 years after the stock market bottomed in 09 to 2011, okay? And so keep in mind, how the stock market can bottom years before real estate bottoms. Is something very important to remember, okay? Now, with the real estate industry getting in a messy situation, and I think buyers are completely drying up now, and it's probably going to get worse over the next 6 to 12 months. You know, the real estate industry employs so many people. Like, the amount of realtors out there is an insane number. Now, not all those realtors count on selling properties for a full-time income, but many of them do. And so think about all these realtors that have made very easy money for the last 2 years, because it's just been like you list a property and it's gone right away, right? It's been easy money for the last 2 years. That's all going away. And when you talk about home sales drying up, like they're going to dry up, and they already are drying up, realtors aren't quite making that money they were making, that 6%, right? That's not coming in. And so all of a sudden those folks don't have the money to spend like they had to spend. I hope everybody that was in that industry had been saving every penny they got, because I'm telling you, you know, that's probably not turning around till maybe 2023 or 2024. And so we're still a while off of that. So all these realtors that have been making all this easy money the last couple of years, it's not going to be easy money anymore. You're going to be on a hope and a prayer to even sell a property here soon, okay? And so a lot of people are going to basically be out of work or be out of an income, or income's going to decrease massively over the next 6 to 12 months here, okay? Now, when we talk about new home sales drying up, that's going to dry up the construction industry, unfortunately. The carpenters, the construction workers, right? The managers, all those folks that have been making really good money and have been, you know, max employed for the past, basically kind of like the past year and a half at least. As all these homes get built, that next group's not going to be there. And we're going to start seeing a massive slowdown in construction of homes starting in the fall time, right? Because all these construction workers have a good amount of work because of all this backlog of homes. They have a good amount of work too about the fall time. But after fall time, that's when you're going to start to see a major dip. And all these folks that have been, you know, working max aren't going to have nearly as many jobs. Some will be completely laid off. Some will just not be making nearly as much. Meanwhile, everything's gotten more expensive, the rents and everything else, right? And so that puts you in a really bad situation. So all of a sudden that construction worker doesn't have that money to go out there and spend in the economy. This is what happens, and this is how ugly it gets, because one thing leads to another thing that leads to another thing. And when the dominoes are rolling the wrong way, it just keeps knocking them down, and one thing leads to the next thing, and leads to the next thing. It's like, oh my gosh, like, how ugly does this get, okay? If we're talking about a lot of people losing jobs or not making the money they were making, right? Plus the amount it takes to go to a restaurant has gone up considerably. The restaurant industry will get hit very heavily over the next 6 to 12 months, if not 18 months. And basically the restaurant industry, that supports over 10 million plus jobs in the United States of America. And these restaurants have been packed for a while. Well, dude, when people are losing jobs, when people don't have that money to spend, when they you know, when that's the situation, people aren't like, oh yeah, let me go spend $100 out to eat tonight, especially when it's more expensive to go to restaurants than we've ever seen by far and away in any time period in history. So that means those waiters and those waitresses aren't making the tips they used to make, so their incomes start going down. The folks that clean up the tables aren't making the money they used to make, so their income's going down. The restaurant managers aren't getting those bonuses that they were getting before, so their income's going down. A lot of these restaurants, you know, the busiest of the busiest ones, those ones will survive this whole situation, but there's going to be a lot that completely go under, right? That maybe, you know, weren't the busiest as it was, but, you know, they've been able to support things because it's just been a good economy. Well, in a bad economy, that's when you find out who are the restaurants that stay and who are the ones that go under. And the ones that go under end up being the ones that essentially, you know, have to lay off a staff of 10 people, 15 people, 20 people, 30 people, and then all those cooks are out of work, and then they're trying to find jobs, and if you have all this going on at the same time, those jobs aren't out there. And so all those jobs, all those help wanted signs that you were seeing in the past, all those help wanted signs are going to start going away. No different than, I remember in 2006 and into part of 2007, help wanted signs were everywhere. I couldn't go into a place without a help wanted sign. Well, guess what? By the time I entered the workforce in 2008, all those help wanted signs were gone. And you needed a hope and a prayer to get even a low paying job, never mind a medium paying job. So these are things to consider. All that open job stuff, that can leave real quick. And as the dominoes fall, it gets worse and worse and worse, okay? Retail, maybe the biggest industry in all the United States of America. Retail, 15 million plus jobs in the United States of America. The majority of those jobs are hourly jobs. Now, we already heard Target, Walmart report some troubling numbers, but here's the deal, guys. When it comes to those retailers, right, all these increases in pay, that's all going to start going away. I can promise you that, because what's going to end up happening now is labor is about to ease up big time over the next 6 to 12 months. And what's going to end up happening, if you come from the retail industry as I do, you know that most of these workers are on hourly, right? And so if most of the workers are on hourly, what you do is you start cutting their hours, right? Because you don't have the money coming in to the retail store, so you start getting your hours cut from corporate. And so they're like, we used to allocate 1,000 hours a week or whatever, you know, depending upon the store. Now we're allocating, instead of 1,000 hours, it's going to be 750 hours. So now you, as the manager of the retail store, you got to start cutting people's hours. And all of a sudden, you know, Joey, who got 32 hours before, now Joey gets 25 hours. And Sally, who got, you know, 27 hours before, Sally's now getting 15 hours. And John, who is getting 40 hours, John's not even going to be full-time now. We're going to bump him down to part-time. He's getting 20 hours. And John, and all these folks are like, what the hell? And they got no choice. It's not like they're like, oh, no, I need those hours. Like, no, if the hours aren't there, your hours are getting cut. That's the bottom line. And so, and then those folks are like, oh, shoot, I got to try to find a job somewhere else. But then if that job's not out there, you know, and so this is what I talk about when the dominoes are falling. They fall and fall and fall, okay? Now, with all this being said, and with likely a lot of bad economic news coming over the next 6 to 12 months, for me this year, I'm fully focused on just adding assets at, you know, very, very discount prices, and assets meaning stocks. That's where my focus is. And I bought a lot of stocks today, and I might do a video tonight all about all the different stocks I bought. But the way I look at it is you very rarely get these sorts of time periods, big recessions, and you have to be a buyer in these sorts of markets if you really want to take advantage of the deals you're given, because they're not going to, it won't stay like that forever. The economy won't go down forever. The unemployment rate won't go up forever. That's not the way this works. You know, I think we're in a real pickle for at least the next 6 to 12 months. And but there's something we do know is the stock market bottoms way before the economy bottoms, and way before real estate bottoms. So that's why I'm fully focused on adding stocks for this entire year. And however low we go, if we go down 50% on the NASDAQ, I'll be buying at 50% down on the NASDAQ. I'll do what I have to do, and that is what it is. Hope you guys enjoyed today's video. Much love as always. Make sure you check out the description area down there. I got a bunch of goodies for you down there in the description area. Some pretty awesome stuff. Much love, and have a great day.